Good morning, everyone. Welcome to our Wednesday trading room hump day. Woohoo! Halfway through the trading week. Let's see how we can do today. Yesterday was a pretty good day overall. The market actually trending a little bit. They didn't really get into their sideways mode until toward the end of the day. But looks like here on the overnight, the market waffling a little bit, kind of going back and forth, still within this larger trading range that the market established into yesterday's close. I won't scroll back through it. I'll let you do it. But take my word for it, we're opening up pretty much where we left off last night or yesterday afternoon, pardon me. Trade forecaster says we are in trend mode here for the next couple of hours, so pretty much the morning session and then some. We'll see if that holds true. That would be a very welcome morning. Hey, good to have you back, Mark. Mark says, finally back after 10 days of playing Army. Great to be back in my trading chair. I figured you were probably out playing in the dirt when you hadn't posted anything. Okay, well, it's early here. We're getting some conflicting signals. We're getting a first macro cross lower here on the Hawk. So the Hawk already a little bearish. The Eagle and the Raptor both into the trading band. The Falcon itself fairly neutral right now. Like I said, the closing range from yesterday's trading, we're kind of in the top end of that. So if that trading range is going to hold, we'll probably see a little bit of a move lower. But right now, we're still kind of stuck sideways. So it's a little bit early to tell. Just give them a moment. Like I say, as far as the Eagle is concerned, for those of you doing your first in sync Eagle signal, well, that's the red bar buy signal here that produced about a minute after the open. You could do a second push on that, namely use that high as where you want to enter the trade. I don't normally do this, but I'll show it for you here this morning. Did it slip? Oh, we got a little positive slippage for a change. So the idea behind that first in-sync Eagle signal is that we're going to try to catch some early momentum as the market tries to find some direction here this morning. Ideally, you don't want your stops too tight, although I will probably be a little bit more aggressive rolling my stops. The Eagle, of course, each bar is worth 12 ticks, and it can get a little bit more expensive in a hurry. You Raptor traders need not feel left out. You can do the same thing with your Raptor. You would be looking for your first in-sync signal. So you've got yourself a bullish band. It'd probably be this guy right here, this number 3 signal. And here too, you could do a second push on it, and you could look to enter above that swing high. All right, well, the bottom just fell out of the market. And I don't think there was a report pending. Just a moment. No reports today except for the crude inventory. Now this was unfortunate and rare, I might add. You're going to find that, and I'll leave it up to you to do, but if you go back through your charts and you find that first in sync eagle signal, that tends to have some pretty decent follow through. Oh my goodness, here I got started doing this. I wasn't going to. So you find your first signal after the open that is in sync with your trading band, and that normally has some pretty decent follow through to it. Well, at least enough to find your high probability target. Obviously, that was not the case here this morning. That is a bit of a rare occurrence for the Eagle. Like I said, I'm not a fan of early trades myself. I try not to get into the market too early. In fact, if it wasn't for the trading room, I probably wouldn't start my trading until the top of the hour. So I'll check the news sources later, find out what's going on. Maybe Mark Zuckerberg got caught doing something again with Facebook that he shouldn't be doing. But it looks as though we can pretty much call this a downtrend now. Now, here's something interesting. You know, you've got a market that seems to be in a tearaway. Where do I get in? Well, this is where sometimes these discretionary signals, these secondary signals are handy. So you pretty much set up a trade. Now, I only have the warning dots. I'm just anticipating the signal at this point. What you could also do if you just want to lock yourself into manual mode so you only had the one contract, you could just get ready on your sell button and wait for the next signal to print. So if you think you've got a market that's in a runaway, there's the next signal, and I'm trying not to blink. And so the signal engages, I can just hit the sell market button and get into the trade that way. Now stops, you're probably going to need to readjust your stops to a reasonable level. But that's what some of these discretionary signals are for. We refer to them as discretionary signals because they don't qualify as one of our high probability signals. But it's a judgment call. You know, it seems like the direction is clear. Where do I get in? Right? Do I have to wait for a full pullback? Can I try to get in a little bit earlier? Well, that's, like I said, that's why those discretionary signals are there, to give you that opportunity to get into a market that seems to be trending. Another thing I'll mention, when the market is seemingly in runaway mode, if it's moving too fast, you're probably better off waiting. There's been times in the past where the market will make a really quick move, higher or lower, and I get so excited, I reach for my buy or sell button, I get in, and no sooner does it fill my order than it starts to reverse against my order. And I get thinking, oh, well, did the market give me a head fake and I fell for it? And the answer to that is probably yes. All right, well, got to show you a couple things here this morning. Hopefully that trade will trickle down a little bit further. Otherwise, we'll be on the lookout here for the next higher probability opportunity. Okay, so here now on the Raptor, we're getting a number 3 signal, kind of confirming what's going on. This is probably a reasonable place to start rolling your stops as well. You can bring your stops in about that last little swing high. We've got some waffling going on here. Okay, we're getting in a position now where it's going to be worthwhile to take this trade to break even though we haven't hit the break even trigger just yet. And we have hit our high probability target, by the way. You can see I'm just trying to get a couple extra dollars out of this one. And you could try to nurse this lower still. Maybe I should try to do that. Here, we'll try to take this a little bit lower. And we'll put the squeeze on the trade, though. I'll use the bar high low. We're down now to the primary support line, and I got tagged on the reverse, but that's okay. The bar high low, a very effective strategy if you really don't want to ride out any kind of pullback against the market. You can typically, I'll go 2 bars back, maybe 2 ticks off, 1 or 2 ticks off. And like I said, that really puts the squeeze on the market and takes you out on the first sign of weakness. So if you, like I said, not feeling like you want to ride out a big move, a big pullback, then that may be the strategy for you. The seller's putting the boots to the buyers here. Again, I think it's one of these days where pick a sell signal, any sell signal. Here on the Hawk, we had several opportunities as well. First micro macro cross. Now note this first micro macro cross and this first micro macro cross. And you're probably saying, wait a minute, how can I have two first micro macro crosses? Shouldn't there only be one? Well, yes and no. I didn't do that very well. There we go. So this is obviously the first micro macro cross because the micro lines and macro lines cross over. How can this be a first micro macro cross? Well, you got to remember what the first micro macro cross is showing you. It's showing you a market that is all out of sync, and then it comes into sync. So they're all a jumbled mess, and then all of a sudden they say, hey, let's go higher or let's go lower, and everybody runs that way. Well, that's what the first micro macro cross is showing you. It's showing you that it's been indecisive, and now all of a sudden it looks like the market's ready to commit. So bars were out of sync, so bar colors are out of sync, trend lines are out of sync, and your filter is out of sync. And then this again is the first signal that comes when everything is in sync. So you can get a first micro macro cross within a trend as well. It looks like now the buyers finally woken up somewhere around the 64.50 range. I would like to see another test of the extreme, or if you're going to try to get this a 4-arrow consolidation, if you are going to try to get this one, you should probably do the second push entry, and you should probably risk it below that swing low. But I don't know, anything counter trend today. I don't know how aggressive I want to be on that. Are we going to? We should get something resembling a test of the extreme, but oh well, maybe not. Wow, where'd that come from? That is a serious pushback on the part of the buyers. That's crazy strong. How can I say that? Well, look at what happened just before. Remember this eagle trade where we were looking to buy and how quickly the bottom of the market fell out? And yeah, they thought about it for a little while here, but then they kept plodding lower and lower and lower. Like from tip to tip, this has got to be 4 figures. Yep. That's a huge move out of the open. And now the buyers, well, they've got at least a third of that. It does look a little bit like a bear flag though, doesn't it? Bear flag, for those of you unfamiliar with the term, is this thing, this little pullback phase. And typically we will see a bearish break from there, from a bear flag, hence the name. And then the big question is it going to turn into a test of the extreme? Right? Is it going to come down here and hold the lows and reverse? That would make for a pretty predictable buy. Or is it just going to keep on going lower? That's the tricky part on this one. So I think we can anticipate, like I said, the test of the extreme. if that fails, well, then we're going to have ourselves a pretty decent buying opportunity, I think. That's how I kind of see it unfolding. So short term, you've got some sell signals here on the Hawk, Falcon, and the Raptor. And actually, technically, I suppose that's with trend, isn't it? It's almost to the point where we could just set a great big bracket trade again. What's with all this volatility? I'm not used to this volatility in the market. Pardon me. They're fighting it out pretty good here. We're getting mixed signals. We're getting the back and forth now. The Hawk really swinging back and forth, as is the Falcon and the Raptor. That could well be the test of the extreme right there, folks. Here on the Eagle. That may well be the retest of the low. That could be all that the sellers still have left in them. So we're going to get an early cloud crossover signal here on the Raptor. We've got the warning dots. Same signal here on the Falcon, the trend change signal. The Hawk already bullish with that first micro-macro cross. I'll follow it here on the Raptor. I would like to get a little bit of a pushback, but I'm going to anticipate the signals are going to print right there. Sometimes you can fool yourself because the Raptor will produce sometimes two warning dots before the signal. Something like this one here. You see we have warning dot, and then finally the signal. So here were actually three warning dots before the signal printed. All right, I better cancel that because that order is no longer valid. That's set up. Oh yeah, we got some serious waffling going on here. We have ourselves a market that is very sideways, very congested. I'm going to throw an OCO in as my just-in-case order. Give it just a little bit of room there. All right, get my stop going. This is my initial stop. And now, of course, this swing high here at 64.82, that's going to be the big obstacle for this trade. Oh, really? Look at that. Wow. That's just crazy. Well, counter trend, right? Like I said, counter trend trades, they're the ones that almost always end up costing me money. It's almost like you're better off ignoring um, anything against the trend. So we've got what seems to be an obvious trend to the short side, and it's almost as though you're better off ignoring any buy signals, at least until the market trades above this swing high right here. Because what's going to happen is if it trades above that swing high, we can expect two moves in the direction of the breakout. So the breakout would be move number one, and then somewhere there's going to be a retest, and then that will enable us to look for move number two. That's going to be the bigger, stronger move. Short term now, we're just kind of back and forth here. We've got a couple of follow-up sell signals. Oh, here they're going to run on me now. Here's a hard edge bounce on the Raptor. I was just going to get in there with a sell signal, but a little bit too late on that. And very nice follow through on that. So, again, staying with the trend looks like it's going to be a lot more profitable for you today than trying to do anything counter trend. And we're getting some pretty big ranges going on here too. Excuse me. A late filter entry signal here on the Falcon with a second push opportunity here. Also a 4-arrow consolidation on the Hawk. And here on the Raptor, we've got now a possible counter trend signal. That's the number 2 signal. Another number 2 signal. Now you see this signal, this bar right here, so close to the hard edge. Oh, I was going to say, if it reversed lower, I would consider that close enough to be a hard edge bounce. But the quick little reverse up to the hard edge of the trading band, so that's your target for the number 2 signal. The buyer's starting to dig in a little bit. And here now another number 3 signal. Wow, and they're going to run away on me again. They're not going to give me a chance to get in on that one either. We have got some craziness going on here. The way the bars are unfolding here, I'm wondering if there's some holes in the orders. What I mean is in the price levels. Because it's moving so quickly sometimes. It's like there's a void. And there's no orders at 64.44, so it hops right over it and goes down to 64.34 and so on. Well, my only problem right now is the market's moving sometimes so darn fast. By the time I try to get to the chart, the signal has already done its thing. Yeah, we've got some crazy volatility going on here this morning, folks. We haven't seen stuff like this for a long time. Scott asked Eric, so that's why bars will print real fast and the prices will amp up. There are no trades at a certain dollar amount. Yes, there's not enough orders. What tends to happen is somebody will flood the market with an order. Not easy to do in a market like the NASDAQ, because the NASDAQ's pretty liquid. Certainly really difficult to do in a market like the S&P. But yeah, so let's say we're looking at 64.40. I won't bring the, oh, maybe I'll bring it up just to show you. It's really hard to watch. One second here. I keep forgetting whether I'm supposed to use the dynamic superdome or the static superdome. I guess I'm supposed to use the static one. Where are you? There you are. Okay. So here you can see your orders. NASDAQ. Okay, so here you see the orders at each price level. Like I said, this is really difficult to follow. I know some traders like to watch it. I suppose when it isn't quite so fast, you can make sense of it. But you can see the orders above and below the current price being the yellow bar. And you can see that they're pretty thin overall. There's like 2 and 3 and 4. That's part of the reason the market is moving so fast. If somebody came in with, you know, an order of even 25 or 30 to buy or sell, well, you would move the price the next 3 or 4 price levels, right? Because with only 2 or 3 or 4 orders on either side of the current price, if you place an order of 30, well, you would absorb not only the current price, but the next 3 or 4 levels beyond that. The institutional traders are very aware of this. So, you know, let's say they've got to place 1,000 contracts in the NASDAQ today. They're just not going to go in on the open and buy or sell 1,000 contracts, because that would adversely move the market. Let's say they wanted to buy over the course of the day. If they threw in a buy order for 1,000 contracts at 64.50, yeah, they would fill 64.50, and they would probably fill all the way up to, well, 6,500 at least, which, if they're planning a long-term trade, probably not a big deal. But otherwise, it's kind of detrimental to what they're trying to do. They're trying to buy at a good price, right? They don't want to drive the market up only to have the market fall against them. But yeah, it's a lack of liquidity. The market's a little bit thin, and if a bulk order came through of any size, 30, 40, 50, then boom, all of a sudden down she goes or up she goes. So a great question here. So Scott asks, well, so why does it jump down rather than just sit there at the price? Because it's a market order, probably a market order. Well, I know it's a market order. So the market order means that, let's say I place a market order to buy 50 at 64.50. Well, the order goes in at 64.50. If it can't fill all 50 orders at 64.50, then it'll take the next price that it can get, which will be 64.50 quarter. If there's only 2 contracts sitting there, then it has to go to the next price, 64.50 half. If there's 4 contracts there, it will take the next price, 64.50 3 quarters, and so on until all 50 orders are filled. Right? The sellers aren't going to sell it to me cheaper, so it goes up the price ladder. And if I were selling, it would be reversed. It would go down the price ladder. Now, you could avoid that, as Scott suggested. You could throw a limit order in, but whoever put in that big order has a reason. They may know something we don't know. Maybe they're just an institution. Maybe they're getting out of a position, right? It's not always somebody getting into a position. Maybe somebody needs out and they need out right now. And so they dump all their orders and they get whatever price they get. But it's a great question, Scott. Thanks for asking that. A lot of people aren't aware of the mechanics of the marketplace. You know, we kind of get in the habit of looking at the charts, watching them scroll by, and we think of them as a very expensive video game. But you've probably heard it referred to that the market is an auction, right? It's traders are trying to determine, is this a fair price for the NASDAQ? Now, the NASDAQ, the E-mini, the Russell, they all make less sense than if you consider the physicals. If you look at a market like crude oil or soybeans or copper, it's like I say, it's a real life auction, and traders are trying to say, is this a fair price for crude oil? Yes, no. All right, I said I wasn't going to try to buy again, but I'm looking at how the buyers are trying to push the market back here. And I'm thinking maybe if we get outside this trading zone, or not, they're just going to keep pushing it sideways. Like I said, there's different people advocate doing different things here with the dome. Personally, I find it a little bit too much to look at. All right, here come the buyers again. Really, the best place to buy is above that last swing high. So if you wanted, you could do an OCO. Got burned on the last OCO, but there you go. You could do an OCO above or below. So you would look to buy above that swing high, 64.64 quarter. And you would look to sell below the swing lows here at around 64, maybe this bad boy right there. 64.44 3 quarters. This would probably be a pretty safe trade overall, this type of bracket. Just because where you see these recent swings here through the market, how it's going back and forth, that's pretty much defined the trading range right there. So long as you enter outside of that trading range, you should be all right. And by the way, I'm just showing this here on the Raptor, but of course, we've got the exact same thing going on here on the Falcon and the Eagle. So you could do your brackets there as well. And here now the #1 cloud crossover signal. So our trader's really going to try to push through the bottom end again. Excuse me. Got a little tickle in my throat this morning. Oops. All right. Well, we'll put that order back and we'll hold the stops here for just a moment. Try to hold stops back a little bit higher. Seller's got to get it going on here. No, look at that. Buyers are going to run the market after all. No love from the OCO orders this morning. Okay, well, they don't want to go down. You can be fairly certain they want to go up. Trying for a second push now on this number 1 signal. Yeah. Mark says yesterday's session was kind of slow, but today is sure making up for that. Honestly, I don't like the indecisiveness of the market. It makes it very, very difficult to trade, as I have so aptly demonstrated. And we're starting to get that candy striping going on, which tells you, well, it confirms what you know already. The market is in a sideways twist. Yeah, maybe, David. David says this is an extremely volatile market that wants to go up at this point. I do my best not to bring a bias to the marketplace. Aside from doing counter trend trades, my worst days will be days where I have it stuck in my head that the market has to go up or it has to go down. Usually I'm wrong. Usually the market will do whatever it wants to do. Yeah. Mark writes, having trouble getting back into my groove after being gone for a week and a half. This volatility sure isn't helping. It's funny, isn't it? You get away from the markets for a few days, and you kind of seem to lose your sense of rhythm. And it does take a couple of days to get back into the swing of things. This is why a lot of traders prefer a longer term perspective on the market. They're not so concerned with the A little back and forth of the intraday. Okay. So after this last move lower, well, you can't see it very well here on the eagle. I was hoping it would show it a little bit more clearly. But you see where we tried to make a new high, failed, came down, made this low. Now we're trying to make a new low, and look what's happening again. We're heading right back into this trading range. I'm thinking the market's going to try to head back up here. So here on the Falcon already we have a trend change signal. On the Hawk we have a first macro cross and a macro pullback. The Raptor, well, we can wait for an early cloud crossover signal. So the cloud's almost crossed, like 80% of the way there, 75% of the way there. If I get a little bit of a pullback now, there we go. That's going to be my buy signal now on the Raptor. That's going to be my early cloud crossover. Darn it. All right, let's try that again. And next line, whoa, median line up at 65.15. That would be a definite home run. I might be reaching a little bit far, but we'll see. All right, so let's move that up a little bit. I'm going to try to run this one some distance. I'll put it up here at 6,500, but that's a real home run trade. There we go. Now we've got the full on number one signal printing pretty much at the same level as the early number one signal printed. Certainly the primary support line here at 64, 66, 3/4 seems like a doable target. Yeah, Scott says there's so much green and red on my Eagle chart. I'm going to print it and save it for a Christmas decoration. All right, so the trade now at break even. Now comes the tricky part. How do I want to manage this so I don't get stopped early? Come on. Yeah, I was waiting for that. Mark says, punch out now, take the profit. All right, we'll go with the parabolics. No, don't look back. Get up there, you stinkers. I know you want to get up back near 6,500. Come on. You can do it. There we go. Ah. All right. Well, we'll see here in a moment if that was just a touch too aggressive. I was thinking about switching over into the ATR. Nope, the ATR wouldn't have held me in either. All right, so just as well I took profit where I did. Yes, here's an interesting observation, and I'm glad Mark points this out. When your band starts to get really broad, there's a good chance the market is going to make a pullback. One of the room members was actually tracking the difference between the soft edge, the extreme soft edge, and the extreme hard edge. And he came to recognize that when it got to be about 40 or 50 ticks wide, there was almost certainly a pullback to be expected. And you're going to find that if you go back through your chart and you find those times where your trading band is very, very broad. So see, from the extreme short edge to the extreme hard edge, it anticipates a pullback. So that's a great tip, and thank you for reminding me of that, Mark. Now we're kind of in slush land. Not quite sure what to make of it at this point. I thought the rally was going to be stronger. They did get, to 64.75-ish before they put on the brakes. Not sure I necessarily want to hop in on another trade right now, though. It might be a little bit late, this hard edge bounce here on the Raptor. Might have been my best second chance to get in. Don't really feel much like buying above the highs. All right, well, we'll just leave it alone for now, and well, we'll wait and see. My goodness, it's only we're only an hour into the session. It seems like we've been going at this for a couple of hours already. Well, they're still pressing. All right, so we seem to be holding up here a little bit around 64.80. A little bit of a struggle, perhaps. No. So 65.15 looking like it's going to be the next target for this market. And are they just going to run up there and not give me another chance to get in? Maybe. I may have missed my best second opportunity to get in on the trade. And David says I'm expecting a scalp reversal at 6,500. It's entirely feasible. That there would be some pushback from there. But what started as an overly bearish market today has now turned into a bull market. Crazy, crazy day. Yeah, way to go, Mark. Mark says I picked up on that late filter entry signal. I saw this one too late. This would have been a nice spot to get in on that breakout through 60, this whole 64.80-ish range. Okay, I am considering another buy here on the Hawk. We just got a red bar buy signal. The Falcon, strangely enough, is going to be working a trend change signal if it goes higher from here. All right, I'm going to call that a hard edge bounce. This one right here. Now notice it did not touch the hard edge, but it's awfully close. It's like 2 ticks from the hard edge. So technically the hard edge bounce, the number 3 signal, has to encounter the hard edge first. But I don't know, I'm seeing so much upward momentum now that I'm thinking that that may prove to be close enough. And if they, I was going to say if they pull back a little bit, I was going to give it another tick or two on the entry side, just to avoid a sloppy fill. And let's see, where was my target? I was looking, oh yeah, 65.15. Let's swing for the fences here. I won't be too greedy. Look to try to get out around 65.10. And yeah, I think David could be right. I think there could be some resistance, some selling going on here as we get closer to 6,500. If we get close to 6,500. Not there yet. There we go. And I'll go back into parabolic mode now and just let the parabolics manage the trade for me. My break even, my auto break even stop up there is redundant. I could just eliminate it. Oh, and I got tagged. But that's okay. Not a bad little trade for trying to get in. You can see what I mean about how much easier it is to trade when you have something resembling a trend. Like it's really been a great day education-wise because I've been able to show you good things and bad things. But it's just so much easier from a trading point of view to take a trade when the market does have a little bit of a trend going on versus trying to figure out a trade when this is going on. Sure, there's still big ranges going on here. Sure, there are opportunities, but what a headache. And then when the market makes its breakout, well, we know there should be two moves in the direction of the breakout. So there's move number one, and here now, the more predictable move number two. I tell you, sometimes the hardest thing to do as a trader is just to sit there and do nothing. That fear of missing out is so strong that it can really mess you up as a trader. And unfortunately, it's something we all have to come to grips with on our own. Crude oil didn't do much with the crude inventory report today. Fell off slightly, but just spent a lot of time going sideways. So here's the inventory report. Came out at 7:30 Pacific, and you can see a lot of back and forth, back and forth, back and forth. But price-wise, really very little coming out of that. David makes a comment here. It would appear that on volatile days, switching the Raptor to 12 ticks would be smart. Yeah, the problem with the volatile days, however, is a lot of times you don't realize they're volatile, or the volatility comes up on you so quickly that you don't have a chance to change. I do know Raptor owners that will run multiple settings on their Raptor. So for instance, they'll have like their normal 8-tick Raptor, their default, and then they may run a larger chart, a 12-tick or a 20-tick, just kind of give them a different point of view on the market. You need to be careful though when you start adding stuff. Trading is not about perfecting your trading system. I think as a rule of thumb, traders, we're perpetual tweakers. We've got to always fidget with our trading system. I bet if I took a survey here in the room, by and large, a lot of us are the do-it-yourself types. I don't need to hire a professional to fix my plumbing. I can do it myself. And then when the valve blows off the toilet, you better phone the plumber. I think that it's just the way we're wired, but that is not trading. So often I come across traders who are more interested in talking about RSI or stochastics or Bollinger Bands or, what's the best settings? What settings do you use on your thingamajig setting? On your thingamajig oscillator? Oh, that's a good name. I should actually make one. And, that's where the focus is. You see it in the chat rooms all the time. You see them at the forums all the time. What are the best settings for this and that? What signals should I use to trade Forex? And on it goes. That is not trading. Trading in a nutshell is first and foremost trying to define the market trend. If you haven't figured it out already, if you're not trading in the same direction that the market is going, you're not making any money. So that is your key priority, your key objective. Now, whatever you need to do to get you there, then by all means do it. So if that means running a 20-tick chart along with your 8-tick chart, or trading off a 12-tick chart, or using stochastics, or using Bollinger Bands, or whatever the case may be, go ahead and use it. But don't go down that rabbit hole thinking that, oh, if I only add this new thing to my chart, I'll eliminate all my losing trades. No. Like Floyd, for instance, I know Floyd, he likes to watch the ADX, and I think it's on a 30-second chart or a minute chart. So Floyd gets a feel for the short-term pulse of the market. Is a trend building? Is the trend waning? Are traders coming in? Are traders going out? And that works for him, and that's fantastic. But like I said, you need to be careful what you're adding to your charts. You don't want to go down that rabbit hole of thinking, oh, if I only add this, I'll never have another losing trade. No, sorry. Yeah, and this is fine. Like David says, besides volume, the only indicator I use is RSI, looking for divergence for counter trend moves. And that's okay. RSI is great. I love RSI. RSI is, without a doubt, one of my favorite indicators. But, again, If I throw my RSI on here, okay, if it helps me make a trading decision, like David says he uses it for checking out divergence. Okay, that's great. So down here, you know, the market's showing some bullish divergence. We're kind of got a little bit of a bearish slant going on. All right, maybe that number 3 signal is something I want to get on board with. Here, now we have a little bearish divergence. The market's kind of holding the tops. Maybe if a number 2 signal crops up here, I'll look to short. Great. You know, if that helps, then by all means, go for it. But if, you know, you just add indicator after indicator thinking you're going to eliminate your losing trades, like I said, that's the wrong course of action. What you want to do is you want to be able to identify trend. You want to know where you're going to enter. And after that, it's a game of money management, not risking more than you can afford to lose. Well, just when you thought the buyers were down and out, whoa, look at this monster rally today. After the open, I thought the sellers had the buyers on the ropes. They were just playing possum. An hour in, and the buyers come back. And we're pretty much back where we started the day. Not quite, but close. And we did hit the primary resistance target eventually. So what started as a bear day, now a full-on bull market. And you can probably continue to look for buying opportunities. But that said, a little bit of a pullback would not be out of the question here. You can see the hawk already getting a little bit more bearish. The falcon definitely more bearish, as is the raptor. We actually have a counter trend signal here on the raptor, or you may consider that the larger width trend signal. I know it gets confusing, doesn't it? See here what I mean by the larger width trend signal. The last few days, the trend has been down. And today, looks like we're getting a little bit more bullishness coming into the market. As a trader, you want to try to be more in a reactionary mode than in a predictive mode, if you can help it. And here we go with that sidewaysness again. Yeah, Nick says the day's low was approaching the 200-day moving average. Institutional traders may be picking up long-term positions. Again, you know, it's almost impossible to second guess what the market's going to do. Traders watch things like a 200-day moving average. 200 days, by the way, if you don't know why they use 100 days, 200 days, 50 days, Why those are popular moving average numbers? It's because there's approximately 200 trading days in a year. 100 moving average, 100-day average would be a 6-month trend or average price. A 50-day moving average would be a quarterly average price. So yeah, if they're coming back to the yearly average price, they may think that, yeah, all right, this is a good spot to buy. Prices have come down a little bit. This is kind of the average over the last year. Sure, we'll look to buy here. But you'll drive yourselves crazy trying to second guess the market. I can't emphasize that enough. All you can do as a trader is observe what's going on. Like I said, try to pick the direction. Is the market up? Is the market down? And then try to pick your battles accordingly. So right now, I would be inclined to say that the market is up. We're into the hard edge here on the Eagle and the Raptor. We're back into the hard edge. So when we hit the hard edge, we normally anticipate some sort of reaction. Okay? So if I get a bullish reaction here, I'll be looking for a chance to buy. After that, it becomes a matter of logistics. All right, so I'm going to produce a buy signal. It's extremely unlikely the market will just fall off the map here and not give me a retest of the high. But after that, like I said, it becomes a matter of logistics. I thought we were going to get a buy signal, but we're going to pretend. So let's say we get our buy signal and I place my order. Now it becomes, okay, where do I place my stops? Where do I have to put my stops in order to make this trade work? Can I get by with my stop right there? If I think I can, and I can afford the risk, well, then I take the trade. And that's trading. And so long as you don't risk more than you can afford to lose, and so long as you keep coming out on top at the end of the day, you'll be a successful trader. So you limit the number of times you trade. Try to limit your trades to 2 or 3 or 4 times in a day. That'll do a couple of things for you. First off, it'll make you a lot choosier. You'll become a lot pickier about what positions you take. You won't necessarily jump on ones that are just printing and you feel like taking it because you're bored or the market's moving really fast and you're afraid that you're going to miss out on a huge move lower. And while in the back of your mind, you keep thinking, I need to see a test of the extreme here before I can really get serious about shorting. Is this the best opportunity I'm going to see today? Is this the trade the institutional traders have been holding out for all day? So if you're only taking 2 or 3 or, like I say, maybe 4 trades a day, that gives you the luxury of trying to hold out for the best setups. And honestly, you can make a lot of money. Some of my best days were trading only trading 2 or 3 times. But when you trade 2 or 3 times and you have the ability to take 2 or 3 contracts per trade, and let's say you make $100 each time, well, that's still going to turn out to be a $500 or $600 day. There's nothing wrong with that. You do that every day over the course of the month. That's a lot of money. The problems start creeping in when you start to trade too often, when you lose your focus on your money management, when you lose your focus on your trend. That's when things start to get a little bit dicey. Well, I'm not sure I agree with the first part here of Mark's comment, but certainly the second part. Mark says, yep, the days of defined trend in a particular direction in the NQ are over. High probability signals in either direction have been my friend more often than not the last several months. The volatility certainly coming into the NASDAQ. I think what we're looking at in the stock indices in general are larger trading ranges. Where's my daily chart? So, I think Mark's right in the sense that, days where we have ongoing trends for months at a time might be over, but you can see we still get some very pronounced moves. We just seem to be spending a little bit more time going over the same prices. And I think that's probably going to hold through the summer. I think we're going to see, the market rally back up to 7,000 and then come back maybe down to 6,300 and then maybe make a push at 72 and so on it will go. That's my guess anyway. You can take that and $5 and go down to your Starbucks and buy yourself a latte. Yes, David is asking if I change my Raptor to 12 ticks, do I need to change anything else? You're going to find as you change your brick size, you're going to need to adjust your clouds as well. Otherwise, your clouds are going to get very, very thin. So go to your Raptor 2.0 and go here to your clouds and your hawk bars. And you're going to notice there's a relationship between the cloud sizes, the hawk bar brick size, as well as your chart size. So your large cloud is 1.5 times your brick size. So if you're going to move to a 12 tick, you're going to need to change that to 18. Your fast cloud is the same size as your brick. So that would be a 12 for that one. Your hawk bar brick size is 75% of your tick. So if you're running a 12 tick chart, you'll need to change that to 9. If you don't do that, like I said, your cloud is going to twist up like a rope and you'll only end up producing number 1 signals because there won't be enough activity or enough space in the cloud to actually produce anything else. All right, so here we go now with the test of the extreme. There was a nice little cloud crossover I would have liked to get on board with. As the buyers pick up the trend again. Joel's asking, don't you have to change the filter too? The filter will change by default. Oops, no, you're right. Sorry, Joel. Joel's right. Yes, you'll want to change your filter size as well. So you would change that to 12, or pardon me. You would typically it's 1.5 times. I don't know why mine is set at 10. I must have made that change a while ago. A couple of ticks here or there really isn't going to affect it that much. But yes, your filter size should be 1.5 times what your brick size is. Yeah. Thanks, Joel. Okay, here we are back at the high du jour, and the buyers taking the sellers to the woodshed. And I think they're just going to keep pressing higher here. Again, this is just one of these trades I just want to hop in with a buy order. I was looking for this retest of the extreme. I was looking for a reaction here to the hard edge. You had a couple early opportunities here on the Eagle. If you didn't feel good about taking it while the Eagle band was ever so slightly bearish, you certainly had another chance to get in right here with very good results. And now that we've put in a new high on the day, there's probably going to be another little hesitation or pullback before the next rally up. All right, gang, if you're going to keep trading this afternoon, I think you can anticipate more from the buyers. I don't know if how deep they're going to get into yesterday's range. They've kind of moved a long ways already this morning, but I don't know, maybe 65, 60, 65, 70. It does seem possible. It's not that far away from where we are right now. But I would definitely stay on the bullish side. Try to take advantage of any pullbacks for a buying opportunity. All right, I will talk to you again tomorrow. We'll see you then. Bye for now.